So here's 1.6 trading systems. I have no idea why I'm saying 1.6, but it's like a trading system and a half, all in one. On day 11, I talked about 11 different trading systems and previewed, I think, 3 of them. Today I want to preview one of them, but I think it really turns into more than one trading system, and it carries with it a lesson. The trading system itself, the entries and exits, are part 1, but the 0.6 element of the trading system is the money management element of it, and it's so important. It really should be worth more than 0.6, but I thought this would be interesting. Since it's day 16, why don't we talk about 1.6 trading methods? I'm just about to pull up on my chart the Ichimoku Cloud Indicator, which for a lot of people justifiably doesn't make any sense at all. It's a bizarre indicator made up of funky lines that are all over the place. And I want to share with you a theory that I have that I think can be borne out and made to be true over the course of time that you learn to trade. And that theory is this. You can take an indicator, no matter what it is. You can add something a little bit different to it. You can make an entry and exit method out of it. And then you can add to the entire method a money management plan that brings it all together. So here I am, just about to bring up the Ichimoku Cloud on my MetaTrader charts for Forex, but you could do this in, really any other market. And I'm looking at the traditional settings. The Tenkan is set to 9, the Kijun is set to 26, and the Senku is set to 52. Let's just do something weird. Let's go 18, and then let's double the 26 to 52. Let's double the 52 to 104. Just do something different with your indicators. Don't just do the same thing that everyone else is doing. And then you bring up this bizarre set of indicators. I mean, it's ridiculous, right? I mean, it's totally whacked out. Never seen anything like it in your entire life, I suppose. Now, I've got the regular stochastic oscillator here, and I don't think we really need that. But we're going to leave it on there for just a moment. All right, let me give you a trade entry, which is part 1 of the trading system. We've got this section here. There's clouds on the Ichimoku cloud, and these clouds run through the middle of my chart here, and you can see them. Some are gray and some are orange colored. You can see that. So for this trading methodology, here's what I want to have. I want to watch for a dip below, stay with me here, I want to watch for a dip below the orange colored cloud right here. So I'll draw a box. In this area where it dips below the orange colored cloud, I don't really care what that orange colored cloud is. Senku span. I don't even care what it means, and it doesn't matter what it means. Here's another example where it falls below the cloud. And then there's 3 examples all on this chart right here. And this area right here, it falls below the orange cloud. In each one of these instances, what we want to do is consider selling this currency pair on this 15-minute chart. You could probably do this on the 1 hour, you could probably do this on the 4 hour, the 6 hour, the 2 hour, the 3 minute, the 16-minute, doesn't matter. In each one of these instances, we want to sell as soon as a candle closes below that cloud. So right here we would sell, right here we would sell in this area, and right here we would sell in this area. Put a stop loss just back above the cloud, back up here above the cloud. And we want to put a profit target at a previous low. So let's bring it all together. Let's use the latest example here on the chart as our example. So we're looking at it close below the cloud here on this big giant candle or on this small candle here, but we'll just take either one. Stop loss is going to go above the cloud right here. And then we'll back up on the chart far enough to find a recent low. And we'll put a profit target down here. Entry, stop, profit target. I'll pause, and when I come back, we're going to take an example. We're going to look at another example of this. So here we are again on our euro-dollar chart. Forgive this refresh button in the middle. When I run TradeStation securities on my computer, it leaves a trail of a menu item. Okay, in this example, we fall below the cloud, close below the cloud, and let's just put a blue line this time. Put a blue line, put a stop loss up above the cloud here, and put a profit target at a recent low, which would be a recent low over here. Stop loss is smaller than the profit target, and that's another one. I just back up here as many times as we can see it fall below the cloud. So here we fall below the cloud in this area. Put a stop loss up above the cloud and a profit target at a recent low, and that one stops out. But because our profit target is larger than our stop loss every single time, we could really make something out of this. Like, we could make a lot out of this, actually. It could be extraordinarily successful, and it's just a made-up trading system that's going to win maybe only 50% of the time and have winners that are 2 or 3 times bigger than the losers. So that's part one. All right, so here's the next part of the 1.6 trading systems. I tried to load the Ichimoku cloud on TradeStation Securities to look at the continuous contract on the S&P 500. Okay, that didn't work. As you can see here, it doesn't make any sense. It looks nicer on MetaTrader, so you could find it on your own platform and you can add the Ichimoku cloud. Now, assuming that you understand the very simple basics of the trading system that I mentioned, which is just made up right on the fly. I just made up a trading system, and we guessed that it would have winners that were 2 times bigger than the losers. I want to show you the power of a 50% trading system, a trading system that only wins 50% of the time, just half the time, random, right or wrong, half the time. Over the course of 1,000 trades, we would have 500 winners and 500 losers. With a system that had winners that were 2 times bigger than the losers, over the course of that 1,000 trades, we could make, say, $1,000 and lose 500 for a net gain of $500. Now, you might have a larger account and the dollar amounts are going to be different, but let's just go along with this for now. Let's say you have a 3-to-1 trading system. In that case, you're going to have winners 3 times bigger than the losers, and over the course of 500 trades, you're going to make 3 times 500. We're just saying $1 a trade right now. And that's $1,500 in profit and $500 total loss because you have winners that are 3 times bigger than your losers, and you have 500 winning trades and 500 losing trades. That leaves you with a net 1,000. If you can get to the point where you ride your winners so that they are 6 times bigger than your losers, you come away with 500 trades and you come away with a much bigger profit target. So let's say equals 500 trades times 6. That's $3,000. If you have a 5-to-1 trading system, let's say you have equals 500 trades times 5, 2,500, and so forth. You can see here that you get to the point where you can experience a trading system that has a very minimalistic win percentage, but because the winners are bigger than the losers, you're still making money. Now, it's not just about $1,000. I'm just using these as rough numbers, as if you were trading for $1 per point. And we all know that, you know, a point of movement might mean something different across a wide variety of systems and financial instruments. But here's the power. You don't have to win 90% of the time. You don't have to win even 50% of the time, in fact. In fact, you can have a system with a 6-to-1 win percentage, reward to risk ratio, and a 30% win rate, and you're still going to make money over the long haul. And this is why it's so important when developing a trading system not to necessarily concentrate on the best indicator or the best newfangled whatever, but to concentrate on how big your losers are versus how big your winners are. And then if you can just win even half the time, you can succeed as a trader. I want to open your mind to the theory that you can trade for a living doing something a little bit differently than what most people think. You don't have to win all the time. You don't actually have to win on every trade. You can have whole stretches of time where 1, 2, 3 days in a row you're just losing. You can have that. And psychologically, you just need to move past that, and that it's not really that big of a deal, especially if you're riding your winners on the good ones. And that's the theory here is You don't want to get concentrated or stuck in or depressed by uh, small amounts of losses repeated that wear on you psychologically. You want to prepare yourself for that. That trading is difficult no matter what trading system we're using. And it's easier to win 50% of the time, period, than it is to win 90% of the time. But everybody wants the psychological happiness that comes from winning 90% of the time. I'm just inviting you kindly and gently to think about trading from a different perspective. We'll continue this discussion tomorrow, but prep your mind for this. We're going to look at a whole host of win percentages and risk to reward ratios tomorrow to wrap your mind around how big do your trades have to be? How much of a win percentage do you really need to have with the trading system in order to succeed? You're on day 16. Thanks for being here on TFL 365.